First millionaire in my family, the first multimillionaire, so
Congratulations.
I will be the first billionaire. But it's not called death insurance. It's called life insurance. If it's used correctly, it should be used while you're alive.
So from bankrupt to multimillionaire, we have the opportunity and the pleasure to have a guy by the name of Devin Burr on the podcast. He is a massive success. He was in the mortgage industry for a long time. He's flipped a bunch of properties, and now he does a thing called infinite banking. And I don't know about you, but a couple of days ago, I had no idea what that was. He's now helped 1,100 people do the exact same thing. He has a $30 million life insurance policy that he actually gets to use while he's alive, because most people actually have a death policy that they don't get to use ever. Their family benefits, but they never do while they're alive. So I'm excited to go ahead and jump into the podcast. Thank you for tuning in. Dude, I love the brand, man. I love you just showed me your necklace, Mr. Burr.
Yep.
I love that, man. I'm excited to jump into it. You're on Templeton Walker's podcast, which is actually, I was just on Temp's podcast, and then, I don't know, I was watching YouTube or something. I came across yours. I was like, dude, we got to get you on, man.
Yeah.
So I appreciate you being here.
Appreciate you having me, man. It's a pleasure, and yeah, Temp is like one of the best dudes I know.
Yeah.
Mr. Burr actually came about from Temp.
Okay.
So we were doing real estate deals together, and we did like probably 6 or 7 deals, some flips, some wholesale.
Yep.
And he was like, dude, you've done an amazing job, like kind of riding my wave, but I'm holding you back. There's something about you that sets you apart. Like, figure out what it is and let's like run with it. Mm-hmm. So I was like, I want to grow wealthy. How do I become wealthy? I hold on to properties instead of selling them for transactional money. There's the Burr method. My last name is Burr. How about I be Mr. Burr?
Yep.
And coin myself as that guy? He's like, genius. Let's make a music video. The music video is ridiculous.
I haven't
bro.
heard it, dude. I got to hear it.
Have you heard the song by Chingy, Right There?
I think so, yeah.
From like early 2000s?
Long time ago, yep.
So it's a spoof of that, and it's like, I like it when you send me a burr. I'll do a fix and flip, yeah, sure. And then I start rapping, and we're dressed up all ghetto, and it's hilarious.
Dude, that is too funny. Where do I find that, on YouTube?
YouTube.
Okay. You'll have to send me the link.
Yeah.
I'm sure if I type it in, I can get it to pop up.
It was my first YouTube upload.
Okay.
I'm like, how to do the Burr method, but it was just a spoof video.
For sure.
It was fun, dude.
Dude, I love that, man. Well, for everybody that or anybody that doesn't know who you are, catch me up to speed on where you came from and how you got, kind of to where you're at today.
Yeah, so started off in mortgages, and I did that from like 2005 to 2019, and I had probably 50 or 60 jobs. Could not hold a job because I hated being told what to do. So jumped around from job to job. 2019, I just realized like I'm sick of being an employee. I want to build my own thing. And I knew Templeton because he worked at one of the companies I was working at back in like 2011. And I link up with him, do a ride along, and just fell in love with it. This was September of 19. So I started looking for deals, and I locked up a contract in Chicago. It was a 6-unit. I thought I was going to make like 200 racks, and me and Temp were going to split the assignment fee. So I'm like, this is dope. I'm going to quit my job. So I walk in the next day and quit my job.
Oh my gosh.
Didn't make 200 grand.
Mm-hmm.
The deal didn't close for like 4 months. I think I made like 18.
Okay.
But it was a huge learning experience, and I just took a leap, man. Just started growing my wings on the way down, and like I said, did deals with Temp, and then kind of went out on my own around, I'd say like May of 2020, and then just started branching out, learning new things, and now do real estate, but I also have lots of other businesses that bring in different income.
I love that. I'm excited to jump into that too, because you do something called infinite banking, which I don't really know anything about. So I'm excited to dive into that a little bit too. I want to talk about the mortgage stuff for a minute, since we're on that topic. Like, what did you like mortgage? I mean, you were in that industry for a long time, right? Mm-hmm. I bet you learned a lot being in that industry.
Yeah. I like numbers. I've always been good at math. Like, I sucked in school, but I was good at math. That's it. Yeah. So I did well at it, and I liked talking to people, solving problems. So mortgages kind of gave me an outlet to do that. I just didn't like them being in control, like the company, like do this, do that. Your commission plan changes because of this and that. It's like at any time they could just change things, and I didn't have full control. And I'm like a control freak. I love having control, and I just didn't have it.
Yeah,
you know.
Sure. Why not start a mortgage company? Do you ever think about it?
No.
Yeah.
I never thought about it. I just
pain in the butt. I mean, there's a lot of rules and regulations. I mean, we're actually kind of starting a mortgage company right now, but not really. We're gonna be like a business consultant, basically. Like we'll manage the whole P&L of the mortgage company, but logistically, I can't own a mortgage company technically on paper because I own real estate companies. This is a conflict, big RESPA, violations, stuff like that. But there's a different kind of way that we're about to go about it. It's kind of an interesting thing. Let's talk about it at some point.
Yeah.
But
so my wife's still in that industry.
Oh, so she is?
Yeah.
Okay.
We met at the company.
No way.
Yeah. So we met at Quicken Loans.
You're at Quicken then, right?
Yeah.
Okay. Cool.
She was new. It was 2016. I just saw her passing by, and I'm like, ooh, she's kind of cute.
Uh-huh.
And I knew she was new because she was in like an area where all the trainees were. So I'm like, I should probably go introduce myself before someone else does. And so, yeah, the rest is history. Now we've been married for almost 4 years, and
wow.
Just blessed, man. She's an amazing woman.
That's
but she still
awesome.
works there, and she crushes it. But it's tough right now. The mortgage industry is tough.
I bet.
With rates being high.
Yeah, so it's kind of funny. I used to work, I guess, underneath Jason Mitchell. So Jason Mitchell was, at the time, he was a team leader. He was with my home group real estate. I was with my home group. Mark and Jeremy owned that brokerage. And Jason obviously has a massive connection with Quicken because Jason went to high school with, I forget his name, but it was, I think, the CEO or the co-founder of Quicken. So the Quicken funneled a lot of deals over to Jason, right? And then they would close those deals. One of the reasons I think Jason got, as big as he got was that initial relationship with Quicken.
Makes sense.
So I'd always go I'd probably rub shoulders with you at one point because I'd always go back in the day to Quicken. We would do a lot of our team meetings at Quicken. So I don't know. I don't even remember where the heck it was in the valley or what building it was in, but it was Quicken for sure.
It was right around the corner, actually.
Yeah, it wasn't far from here.
It was off Frank Lloyd Wright.
Mm-hmm. Yep.
On the 101.
Yep. Exactly. So Quicken's an interest. So walk me through so you were in LO. Is that what you were doing? Okay. Were you ever an LOA, or did you just went and got your mortgage license and got right into being an LO?
Yeah, just got my mortgage license, and just they would just tee you up with leads. Click a button, and then just calls would come in.
Yeah.
People looking to refinance. So that part of it was nice. You didn't have to go find business. I think that's probably why I never started my own company.
Yeah.
Because you had to go find business and all that. And I just never was at that point where I was ready. I think things in life find you when you're ready for them,
Yeah.
And to this day, I don't think I would want to start a mortgage company.
Yeah.
So I guess I'm just not ready for it.
Yeah.
But it is what it is. But
so the refi game, how, because your wife's still in the game right now, right? Have those pretty much just dried up altogether, or what does the refi game look like right now?
Yeah, dude, she was at a point where she was writing 100 loans a month.
Holy cow.
2020 and some of last year. And now we've been gone for most of the month. She's worked a week this month, just this week. Yep. I think she has 2 loans.
Yeah.
So
mortgage industry's rough right now.
Big difference.
Yeah. Well, why would you refi right now? So now it's just purchases, right? But there's so many people waiting to purchase, and it's just a weird market, right?
Yeah, if it's refis, it's just people needing cash. But if it's me, I'd rather get an equity line for that.
Yep.
So I don't know.
Yeah.
Refi is tough right now, dude.
Well, yeah, because if most people they refied, at a 3% or whatever.
So why would they do a 7?
Exactly. Literally, unless you had to, right?
Yeah.
Yeah, 100%. I would, like you, I think I would just I would either do a line of credit, or I would just sell the dang thing if I absolutely had to,
Right.
and then just go buy another property like when rates come back down. I don't, like I'm not in that situation, but yeah, I
Or
don't think-
rent.
or rent, right?
Rent until the market drops.
Yeah, the market is dropping right now. What do you think? What is your outlook on the market?
I don't think it'll crash.
Yeah.
I don't think it'll crash like it did in '08 because for a lot of reasons, right? People that have these loans right now, they can afford them. '08, they couldn't afford them. There was some shady stuff happening back then. I was in the industry, and it's like whiteout pens were prevalent. You'd white out people's W-2s, write in what you needed to.
Yeah.
Stated income, like people can afford them now, right?
Yep.
Supply and demand is still a thing. So I don't think it's going to crash, but I think it's going to correct. And when it does, like the people that can buy the properties are the ones that are going to buy them quick, the cash buyers.
And it's already corrected a little bit. I mean, we're down not much in the grand scheme of things, but I think we're technically down like 10% or something like that in Arizona. But every market's different too.
Yeah.
Because I'm talking to people like on, more on like the East Coast, and they're like, dude, like we haven't really felt it that much yet, right? And then on the West Coast, like Arizona, Vegas, places like that, like people are like, man, like we felt it, So I think it just depends on where you live too.
True.
Right? I don't know, but I'm with you, dude. I don't think it's gonna crash either right now, at least. There's too many variables right now, right? It's like kind of unlike anything we've really ever seen, right? Where you've just got all these different variables, and who knows,
Yeah, it's like, what are they gonna do? They're gonna keep rates higher, have them keep going up.
Yeah.
Are they gonna gradually put them down? Like, it's a weird time, man.
It's
a weird time.
Yeah.
So I'm not personally like actively investing right now. I'm not looking for deals. If one comes to me, it's a slam dunk, I'll do it. But a lot of what I'm doing is just lending money in first lien position.
Yep.
So I'm the bank, which we could talk about that. Like infinite banking is just basically you becoming the bank in your own life. So I lend on deals. I'll make huge profits, bigger than what the spread looks like. When you think of like if you lend money at 15%,
Yep.
the way I do it, I'm actually making upwards of like 400%.
Wow.
By just adding one thing to it.
Yeah, we got to talk about that.
Yeah.
Let's just dive into that for a little while.
So
just like start from the beginning. If you were just explaining infinite banking to me, and I didn't know anything about it, right? Which I really don't know anything about it. Then what does it look like?
So infinite banking is basically doing what banks do with your money. You're just doing it with your money.
Okay.
So think about what a bank does. You take your money and you deposit it with them, right? So they're holding on to your money they're controlling it basically.
Yep.
They have control of your money. In order for them to do that, what do they have to do? They have
Lend it up.
They have to pay you interest.
Oh, yeah.
Or why would you put your money there?
Of course, yeah.
Right? So they pay you a small amount of interest to control your money, and then they lend it out.
Yep.
Right? So let's say they lend it at 6%. And to keep math easy, let's say they pay you 1%. How much are they making?
5 in that scenario, yeah.
No. They're not using their money. They're paying you 1, they're turning it into 6. That's like a 500% return.
Right, of course, yep.
Right?
Yep.
So really infinite banking is just doing that same thing with your money. So you put it, instead of in the bank, you put it into a place where you control it, and then you borrow against it. So let's say I put $100,000 in, and I borrow against that money. That means that $100,000 is still going to compound and grow tax-free.
Yep.
Then I borrow against it, and I go do a real estate deal where I make 50% return, let's say.
Sure.
So I make 50%. I was still compounding and growing where I placed the money first.
The 100.
Yep.
Yep.
So I'm making money in two places. Let's say it's 5% plus 50. That's 55%.
Yep.
And I had to borrow against it, so it cost me 5% to do it. So I turned 5 into 55.
Sure.
Same thing the bank does.
Yep.
You're just keeping the spread, and you're making those big returns by just using your money the same way they do.
So, but why doesn't everybody do this? I mean,
People don't know about it.
Right. So, like, so now, like, logistically, like, walk me through, okay, where do you put the $100,000? Like, where at, like, what specifically does it look like?
So it's got to be a place that's secure, right? Think about why people put money in the bank is because they think it's secure. It's backed by the FDIC, right?
Yep, up to 250 grand, whatever, right? Yep.
Right. So it's got to be a secure place. You have to have access to it immediately, just like the bank. Where you place it, I don't even like saying this usually because as soon as I say it, people are like, it's a scam.
Yeah.
It's life insurance.
Okay.
Life insurance companies, if you do your research, they're the most stable companies in the nation. Even more so than banks.
Yep.
They don't get bailed out when things go bad like banks do. They have billions upon billions upon billions of dollars that they lend out and that they invest to make small returns. They don't shoot for the moon, but
They're
they
very
make
conservative.
super conservative.
Yep.
So they're always profitable, even through bad economies like Great Depression, World War I, World War II. These companies are still profitable, meaning if you own a policy with them, you share on the profits with dividends. So you get guaranteed growth plus dividends. It's the safest place you can put money, guaranteed to grow, tax-free. You can get it anytime you want by taking a policy loan, and it's protected against lawsuits and judgments. So if you put money in the bank, someone sues you, they could take it. If it's in a policy, they can't touch it.
Interesting.
So you put the money there. It's guaranteed to grow.
Yep.
Even while you're using it. So all you do is you just treat your money like the bank does. Put it in the policy, borrow against it, and then go make more money with it.
So how does it work? Like what life insurance? Like you let's say I tell you right now, like, hey, I got 100 grand, right? And I want to go do that. Okay. I want to go do what you're talking about. Right. What do I do? Just call them up. I mean, like, you know what I mean? Like, what does it look? And then when I go to borrow against it, how does that work?
So here's the problem why I think most people don't know about this.
Okay.
Is these policies don't pay a lot of commission. So the companies don't have an incentive to train their agents on how to structure them like this. Because think about it. If you owned a company, which you do,
Yep.
would you train your employees how to make less money?
No, you train them how to make more money.
Yeah, because you want them to stay.
Yeah.
If they're making less, they're like, I'm going to go somewhere else.
Sure.
So companies don't teach their agents how to structure this. If the agent knows how, they don't want to because they want the highest commission.
Sure.
So the agent has to know how to do it. And basically what it is, it's just building it backwards. If you go in and get a regular policy, it's built for the death benefit. And the death benefit is where all the costs are. And that's how the agent makes all the commission.
Okay.
So if you get a policy like this, it's just you're building it for the cash value and you're doing a small death benefit. You're just overfunding the death benefit to get cash value.
Interesting.
So your fees, your costs are low. Agent makes less commission. You have access to your money. And all you do is when you need a loan from it, you either call the company, insurance company, or you just go online and say, I want X amount of dollars. I want it to go to this bank account, hit a few buttons, boom.
Got it.
Super easy.
And can you borrow when you were saying a little while ago, like you borrowing against that money, right? Like, can you borrow more money than you actually put in the policy?
Once your growth outweighs the cost.
Explain that.
So let's say you put in $100,000.
Okay.
Your cost, the death benefit, is probably going to be about 20 to 30% of that amount.
It's 20 to 30 grand to keep it simple.
Right.
Okay.
So that, let's say 25 grand. You put in 25 grand, you've got access to, let's say 75. You go take it, you go make more money with it. Next year you put another 100. You got 25 that goes to the cost, but you were growing that whole time. Usually by about year 4, your growth is higher than your cost. So when you put in 100, you have access to more than 100.
Got it.
And since it never stops compounding, compound growth takes a while. It doesn't do much, but then it goes up like crazy. So I've got policies where year 10, I put in 150,000. I can take out, borrow like 250,000.
Right.
And then next year I can do more. Next year, more. Next year, more.
Interesting.
It never goes down. It always goes up.
And so then you lend that money out now, like what you're doing right now, right? Is you lend that money out to, let's say a guy like me, just to keep it simple. Let's say I'm like, hey, Devin, I want to go fix up a property, right? And I want to go buy a fixer-upper, right? I can either go to a hard money lender, right? Or I could go to you in this scenario, right? And you would loan me the money to go do that. Is that what you're doing right now?
Right.
Okay. Interesting. And then so you become like the hard money lender in that scenario.
Yep.
Right?
But the thing is, I'm just not using my money.
Right.
I'm using the insurance company's money.
Right.
My money's sitting in my policy, growing and compounding tax-free. So like, let's say you wanted to borrow 100 grand. 100 grand is compounding in my policy, let's say at 5%. So I'm going to make $5,000 on that money, tax-free. And then I give you 100 from borrowing from the insurance company. And let's say you pay me 12%. So that'd be 12 grand if it took you a year.
Yep.
Right? So I make 17 grand, but I only had to borrow at 5. So it took me $5,000 of borrowed money, paying the insurance company interest, to make 17. So I turned 5 into 17, which is 320% return.
Yeah.
But most people would think I only made 12.
Right.
Right?
100%.
It's just where you put the money first. That's it.
It's where you put the money first, and then it's just understanding it, right? It's just understanding the actual return there, right? And knowing what you made. And then really you could do that on a bigger scale as time goes along, right?
Yeah, because you have more money.
Because you have more money, yeah.
The more you put towards it, the more you can do with it. So, for instance, I just bought a $206,000 supercar from my policy. So I've got this money in the policy. It never stops growing. I borrowed 206 grand out of it. So 206 grand just keeps growing.
Yep.
I go pay for the car cash.
If you've ever wanted to get into wholesaling real estate and you want to learn how to flip contracts and wholesale, right? Maybe you're brand new, maybe you've never wholesaled a deal, or maybe you're even doing a couple of deals a month right now, but you want to learn how to do more. Instead of joining my coaching program or somebody else's coaching program, we're actually looking to hire. So go ahead and message me 480-418-5339 and send me a text message opportunity, okay? So if you want to work with me, you want to work with my incredible team, you want all of our leads, you want all of our systems, all of our processes, everything, right? And I've done about 2,000 wholesale deals in my career, then go ahead, shoot me a text, 480-418-5339 and message me opportunity. And look, especially if you're in my state, okay, the state of Arizona. If you live in Arizona and you want to get into wholesaling, this especially is an opportunity for you because you can come sit right in this office with my entire team and be a part of one of the biggest wholesaling companies in the country. I look forward to talking to you.
So I own the car now. It's mine.
Yep.
But if I would have bought the car from a bank, I'd have to pay them payments with interest.
Right.
Right? So I just figured out what the bank would have charged me. I just pay myself that back into my policy. So the money I would have gladly given to the bank to have this car, I'm just paying to myself over a 6-year period, just like I would have paid them.
Sure.
So I'm paying myself over 6 years about $40,000 in interest, plus the 206.
Yep.
But the whole time, the 206 never stopped compounding.
It's still compounding, yeah.
So I actually make about 70 grand just by buying the car.
Right. For sure. Yeah. It makes all the sense in the world. Yeah. I wonder why more people don't know about it. Like, where do people learn? Where did you learn all of that?
Do you know who Steve Trang is?
Uh-huh.
So COVID hit March of 2020, and I was getting all my deals from going to meetups.
Okay.
Local meetups, just meeting people and letting them know I do flips and I've got some capital. Like, I'd love to look at the deals. People would send me deals, and I'd send them to temp, figure out if they're a good deal, and then we'd go in and JV the deal. Meetups went away.
Right.
There was no meetups anymore, so I'm like, what am I going to do? So I'm just listening to podcasts. I'm listening to Steve Trang's podcast, and this dude named Chris Noggle was on the podcast talking about becoming the bank. And I'm like, that makes a lot of sense. So I went down the rabbit hole, like reading books, listening to YouTube, and eventually I'm just like, I heard from this guy, Chris. I should get on the phone with this guy, Chris, and figure out what it is.
Right.
So I scheduled a call with him, and I got my first policy May of 2020. Started using it. I was like, it's incredible.
Yep.
So then got 3 more policies that year, started telling everybody about it, got on social media, started talking about it, and everyone's like, dude, this is incredible. How do I do it?
Yeah.
I'm like, well, just go to this guy, Chris.
Yeah.
So I was sending like 15, 20 people a day to him.
Yep.
Because my TikTok was the first thing that like blew up. I got like, within 2 months, I had like 120,000 followers.
Wow.
Everyone's asking me how to do this infinite banking. And it hits me. I'm like, if they're learning from me, shouldn't I be the guy that sets it up?
For sure.
So I hit up Chris. And I'm like, dude, how can I do what you're doing and set people up with these policies?
Yep.
So now since March of last year, I've set up 1,100 policies.
Wow.
Crazy.
That is insane.
Insane.
Can you, so you say you have, because I really don't understand life insurance just fundamentally, even at a really high level. I'm 27. So I didn't expect, I just haven't done it, right? I just haven't, probably like you when you're listening to Steve Trang, you didn't know what you didn't know, right?
Mm-hmm.
So, you said you have you set up multiple policies for yourself. So I can go set up multiple policies. Is there a limit to that?
Yes and no.
Okay.
It's based on like your income. So if you worked at McDonald's making $12 an hour, whatever they make, but you're trying to get a policy for like 150 grand a year, they're going to be like, you can't afford this.
Right.
Where's the money coming from? So they wouldn't approve that. But it's based on your income and your net worth. So as long as your income and your net worth like justifies the amount you're putting in, you'll get approved all day long.
Wow.
And then if you're not approved, you can get approved on someone else. So like you can be the owner of a policy for somebody else. Like I've got 3 policies on my daughter. She's the insured person. So God forbid my daughter passes away, I get a tax-free death benefit.
Right.
But I own the policy. So I put money in, I use the money.
Interesting. And why would they approve that? Like in that scenario that you just gave, like let's just say hypothetically you were working at McDonald's, okay, and you wanted to put a policy on your daughter, right? How come that's approved? Just because you're putting it on somebody else?
Yeah, because it's based on their human life value. Like think about if my daughter was 14 at the time, she's gonna end up working throughout her entire life.
Yeah.
So she's going to be able to afford to pay the premiums even if I can't. You see what I'm saying?
100%,
so
yep.
That's what they look at. Can this person keep putting money into this policy? That's what they approve it on. And health, of course. You can't be on your deathbed.
Yeah. Which makes sense, right? They're just looking at data like, okay, the average American makes X amount of dollars in their lifetime, factor everything in, inflation, income, wage increases, like this person's this old, they'll, if they were just to live an average life, they'd probably make fill in the blank.
Yep.
Right? It's interesting.
And the insurance companies are very, very smart. They don't just insure anybody. Like if they did, they wouldn't be profitable because everyone would be dying. They have to pay out death claims all the time.
Yep.
So they insure people that they're pretty sure are going to live a long time.
Right.
So for instance, like I started my first policy at 35. Let's say I lived to 85. So 50 years of me putting money into a policy. What the insurance company does with that money is they take it and they go invest it.
Yeah.
So the longer they have that money to invest, their risk goes down.
Sure.
If let's say I put money in a policy and my death benefit's $10 million and I die the next day because I had bad health and they didn't catch that, they're out $10 million.
Right.
Because they didn't have all my money to go invest.
Yeah.
Right. So the insurance companies are smart, man.
Yep.
They do their due diligence.
And it makes so much sense, right? It's why like if my grandpa were to go get a life insurance policy, it's going to be very difficult for him to get a brand new policy at 80 years old.
It'll be expensive.
It'd be very expensive, right? Because their risk is really high on that, right? Whereas like if I were to go get one right now, I make a lot of money. My net worth looks good, everything. I'm 27, right? They're going to be good health, I think, If you've ever wanted to get into wholesaling real estate and you want to learn how to flip contracts and wholesale, right? Maybe you're brand new, maybe you've never wholesaled a deal, or maybe you're even doing a couple of deals a month right now, but you want to learn how to do more. Instead of joining my coaching program or somebody else's coaching program, we're actually looking to hire. So go ahead and message me 480-418-5339 and send me a text message opportunity, okay? So if you want to work with me, you want to work with my incredible team, you want all of our leads, you want all of our systems, all of our processes, everything, right? And I've done about 2,000 wholesale deals in my career, then go ahead, shoot me a text, 480-418-5339 and message me opportunity. And look, especially if you're in my state, okay, the state of Arizona. If you live in Arizona and you want to get into wholesaling, this especially is an opportunity for you because you can come sit right in this office with my entire team and be a part of one of the biggest wholesaling companies in the country. I look forward to talking to you. So they're going to be like, dude, you're good to go, right?
For sure.
Interesting. So I know that, and I guess I kind of like enjoy asking questions. I know people probably have questions too, but like, when you just look at like life insurance just in general, right? Because I just don't understand it at the level that you do. Mm-hmm. How is the death benefit determined? Like you said like 10 million a minute ago or whatever. Is that just based on how much money you put in over the course of time? Or what is that like? How do they figure that out? Or how do you figure that out? Or who figures that out?
So the insurance company has these really smart people called actuaries.
Okay.
They're nerds of all nerds, right? They basically just review a bunch of data of a select group of people. It's usually thousands upon thousands of people. And they see, like, when do these people usually die that have this medical issue? When do these people die that are in this zip code? When do these people die that are in this occupation? So then they determine how long they think a person is going to live. And then if you're going to put in, let's say, $10,000 a year, they're going to calculate $10,000. What is that going to grow to over the hypothetical lifespan of 121 years old? That's the death benefit. So this money guaranteed to grow at 3.25%. What is it going to be 121 years from now? That's the death benefit. Crazy.
Why 121 years?
That's just the endowment age, with the age they use. So if you live past 121, which one person ever has done that, they just pay you out the death benefit while you're alive. Here's the crazy thing that I had to wrap my head around. When I first learned about this, I was young. I was 34, 35. I'm like, I don't need life insurance. Like, I'm not going to die anytime soon, hopefully, right? I'm healthy. I'm good. But as people think about life insurance as a death benefit, but it's not called death insurance. It's called life insurance. If it's used correctly, it should be used while you're alive. And that's all we do is we show people how to use the actual death benefit while you're alive. And then when you pass away, the actual death benefit pays everything off that you had in life, and the rest goes to your family as tax-free money.
I love what you just said. That clicked for me, right? Like it took all that time to get to the very end where you said that statement right there, and I get it, So yeah, because that's how I thought of it, right? Mm-hmm. Like I always have thought of it, just like you just said, right? Like why the heck do I need life insurance? I'm 27 years old, right? I mean, like, I guess I've thought about it a time or two maybe, right? Just because I'm like, okay, well maybe, but then I just think, well, maybe I'll just go get a will, right? That's where my mind went. I'll just get a will, and just everything that I have and I own and that microphone can go to somebody, right? Like somebody can have the, like.
And that microphone.
Right. Like, I'll just write it in a will, everything I own can just, But I think a lot of people when they're young, they're just like you said, they're just not thinking about, well, and it goes back to what you were saying, I think, of in the beginning when you were talking about the agent, right? The life insurance, the agent who's, the commission, right, is lower, structuring it the way you're talking about. And the companies just they're not out there telling everybody about that, right? They probably benefit more, I'd imagine, the company, maybe, if people used it the other way, right? Where they used it as death insurance.
Yes.
Dude,
the life insurance industry has such a bad rap because the agent is incentivized to screw you.
Right.
Right? Their commissions are the highest on policies that don't benefit you. They benefit your family if you die. Right? Mm-hmm. It gives you a death benefit, but you don't have cash value.
Right.
Think about the most popular life insurance that you probably know of. What is it?
Man, there's a bunch. What is the one? It's they're big names.
They always say buy this and invest the difference.
Yeah. What's
buy term?
Yeah. Mm-hmm.
Term insurance.
Yep. Term insurance.
That's the most popular. It's the most profitable for the insurance company. Because think about this. Let's say you're 26, 27, right? Mm-hmm. Let's say you get a term policy for 20 years. The likelihood of you dying before you're 47 is slim to none.
Right.
The insurance company knows that. So all that money you're going to put in up until you're 47, you're not going to have access to
Right.
it.
I'm just
And then when
giving
you're
the money away.
Yeah, then when you're 47, you didn't die, and you want to get that same amount of coverage until you're 67, it's now exponentially more expensive to get the same coverage. Term insurance pays out 1% of the time.
Wow.
That means that only 1 out of 100 people die during their term. Rest of the people pay all that money to the insurance company.
Yep.
That's what's the most like talked about insurance.
Right.
That's what pays agents a lot of commission. But when you understand that life insurance is one, you should have it regardless. Because think about this: do you drive a car without insurance?
No.
No.
Well, not typically.
Right.
Yeah.
Because if you crash, then you don't want to pay for
Sure.
But there's no guarantee you're going to crash.
Right.
Do you have insurance on your house?
You have to. Yeah, pretty much. You have to. I mean, in real estate, you have to. Yeah.
But there's no guarantee you're going to need it.
Right.
Do you have insurance on your phone? Usually.
I think so. Yeah.
There's no guarantee that you're going to break your phone.
Yeah.
You are guaranteed to die.
Right.
Like, I hate to be morbid, but everybody is going to die.
It's just a matter of when.
Yeah.
Right.
So why not insure your biggest asset? It's not a house. It's not a business. It's not anything. It's you.
Right. 'Cause
if you're gone, you can't run that business. You can't run
the
those
house.
things.
You can't run the car. I mean, like you own all that.
Right.
Yeah.
So without you, everything else dies off.
Right.
So why not insure that for a multiple of how much you're putting in? So I put in about $600,000 a year into policies. We have 9 of them. I have like $30 million worth of death benefit, and it grows as time goes on. So if I was to pass away tomorrow, my family gets $30 million. Would they rather have me? I hope so.
Yeah.
But
Right.
they'll still have $30 million.
Right.
Hopefully they don't screw that up,
Sure.
you know?
Yeah.
But when you learn that I'm putting in $600,000 a year and I can use that money now while I'm alive, while the money I put in, the $600,000 a year, just keeps growing and compounding to get to the 30 million over time.
Wow. It's so interesting. When going back and just so I can understand too, I want to just like for me, when you were talking about the term insurance, right? Where people will go, they'll get a term for 20 years. I'm 27, I get a term till I'm 47, and then they want me to get another term till I'm 67. It'll be exponentially higher, right?
Yep.
What happens to, assuming I don't die, I'm not the 1%, right? I get a term, 47. All the money I put in between now and the time I'm 47, when that term's over and I'm still alive, what happens to that money?
It's insurance companies.
It's so crazy.
Yeah.
So it's just I just pay the money to thin air.
Yep. There is a rider you can put onto a policy where it's a return of premium. So like, let's say you put in $50,000 over 20 years, whatever it is. If you didn't die, you get the $50,000 back. However, you're getting $50,000 now and inflation has taken over. You could have used that $50,000 when the dollar was worth more
Right.
over that 20 years, right?
Yep.
So even that doesn't make sense. What makes sense is to put money in and be able to use it
Yep.
right away for whatever you want. Go buy real estate, go buy cars, go fund kids' college, go put money into your business, and then just pay yourself with interest just like you would have paid the bank if you borrowed their money.
Right. No, it makes all the
That's
sense in the world.
essentially what you're doing. You're just borrowing against your own money
Right.
and just paying yourself what you would have paid them while your money never stopped growing.
So interesting. How difficult was it to go get your insurance license?
For me, super difficult.
Really?
Dude, I didn't pass the second grade.
Uh-huh.
I couldn't, I guess, hold the scissors right or didn't know how to use crayons. I don't know.
Yeah.
Like, got held back in second grade. Passed high school with like a D average. Just not the sharpest guy, good at math, but not the sharpest guy in like school.
Yeah.
So studying for tests was hard. I didn't really hold on to information very well. So for me, it was tough. I took it the first time and I missed it by one question. You need a 75 to pass. I got a 74.
Dude.
So I had to restudy, took it again and passed it by one question. So I got a 76.
Nice. Yeah.
Good as 100.
Yeah, I love that. So, and then what does that look like? What's the schooling? How many hours?
It's just like a self schooling. Like
Okay.
you can basically just learn at your own pace online. I got flashcards and stuff like that. It was like $150
Yep.
for the classes. And then just taking the test. And then once you're approved or once you pass, you have to pay for a license in each state, which is like $75 to like $150. And I'm licensed in like 46 states.
Wow.
But it's all a tax write-off because it's through my business.
Yeah, for sure. That's badass.
Yeah.
That's cool. What I love that, man. I think that like, so how hard all the you wrote 1,100 policies, right? Was that all from social media?
Yep.
For the most part. Isn't that crazy? The power. So how many followers do you have on TikTok now?
790,000.
Do you make mostly content around life insurance?
How I use it, yeah. I'll make content like, here's how I bought my car using life insurance. Here's how I funded this real estate deal. Here's how I bought my phone with life insurance. So basically just teaching people how I do it.
Yep.
And then, all my policies are written with zero marketing because I just put content out there and I don't have to pay for anything.
Right.
It's incredible.
That's
I recently just hired like a guy to do all my editing. I was doing it all on my own.
Oh my gosh.
So I was making the videos, editing them, taking the calls, and now I have a team that does all the calls for me.
Okay.
I'll take some here and there, but I just have a team of agents and someone that edits my videos now. So
Yep.
I've been able to buy my time back, which is nice.
Which is awesome.
Yes.
Yeah. Yeah, it's important, man. I mean, you did a lot for a long time, though, it sounds like. I mean, because you've been doing this for, well, at least several years, right? The life insurance, yeah.
No. Dude, I started my first policy May of 2020.
Really? Okay.
So 2.5 years ago.
Yeah.
And I wasn't writing policies or anything until March of last year.
Wow.
So
from
year and a half, basically.
18 months, you wrote 1,100 policies.
Yeah.
Wow.
Crazy.
That's crazy.
Like some days, like 11, 12 policies in one day.
Wow.
Like just back to back to back to back phone calls.
Yep.
And just days were running together. I'd be like, is it Friday? Is it Tuesday? I don't know what day it is. What month is it?
Yeah.
You know how it is when you're trying to like really get a business off the ground.
Yep.
So yeah, it's been a ride though, man. It's been fun.
That's awesome.
It's opened up a lot of doors just because a lot of income's coming in, and insurance is cool because it's actually on residuals. So as long as you just keep writing policies, the checks get bigger and bigger and bigger and bigger because you have renewals.
Right.
So it's been fun, man. As more money's come in, I've been able to buy my time back.
Yep.
And then as I buy my time back, I can focus on building other things.
Right.
Affiliates, building just different businesses that can pay me different streams of income.
Yep. Which is awesome. What is your goal now, like with everything? And now that you bought your time back in that area, like what are you trying to do now with business?
Pie in the sky goal, like really big. The goal that like scares me is I want to change the schooling system. Like I want kids to learn about how money works, how credit works, investments, what's an investment, what's a liability, what's an asset. Like we don't learn that stuff in school.
Yep.
I want to change that. I don't know if that's going to be possible in my lifetime, but I can start to kind of inch towards it, and then maybe my daughter can take over from there and finish the work for me.
Yeah.
But that's like the legacy piece, right? It's like you plant a tree that you're never going to see grow, but you plant the seeds. So that's kind of the big goal. Smaller goals is really just to just focus on being a better person every day.
Yeah.
You know, focus on being a better husband, better father, better friend, a better son, you know?
Yeah,
and
I do.
If I do that, I know everything else will kind of take care of itself.
I love that.
You know?
That's badass. Yeah. That's cool. What do you think is wrong with why is the schooling system the way that it is? Like what, you know what I mean? Like why, how did it ever end up that way? And then why is it that way? Like why keep it that way? Is the government, I mean, my guess was always just like, hey, you know, the government doesn't want you, everybody can't be successful, right? Like, let's keep people poor, you know, like that was always my thought process at a really like high level, just like bird's eye view looking down, you know?
Yeah. I think that's part of it is like the government and like the system is set up to where they want control. right? The more control the government has, and like, I don't want to go down this rabbit hole,
No,
but
yeah,
it's all about control,
for sure.
right? And if you think about the schooling system, it changes very, very slowly.
It does, yeah.
Very slowly. For even like, let's say, prime example, if they're going to use different pencils, it's got to go through different red tape, and it's got to go through all this different crap just to make that little change.
Yep.
But the world we live in changes very quickly.
Right.
Yet our schooling changes very slow.
It doesn't add up.
Doesn't make sense.
Yeah.
So I think schooling was good in like older times when to be successful, you go work in a plantation, you go work in like a
Factory
mill or whatever, right? And you save that money because at the time you were earning good interest in a savings account, right?
Yep.
And all the things that they were taught back then just don't work now.
Yeah.
If you put your money in a bank account, it's losing buying power by the day because of inflation, right? You can't just go to a job and become wealthy because taxes keep going up. They take more money the more money you make, right?
Yep.
So I just think it's just the schooling system is broken, man. It needs to change, and it's going to take a lot for it to change. And I think the only way I could make that change is if I'm rubbing elbows with billionaires.
Yeah.
I have to be one myself. So
that's the goal.
it's not gonna be easy. If it was easy, everyone would be a billionaire,
Everybody would do it.
right?
Yeah, 100%.
I've been the first millionaire in my family, the first multimillionaire. So
Congratulations.
I will be the first billionaire.
You can do it, dude. I think anybody can do it, man. I think literally anybody that puts their mind to it, like for a long enough period of time, right? I mean, it's a math formula.
It is.
Right? Like, I mean, if you really think about it, like, I think people overcomplicate success. Like, it's like, dude, you just have to do it every day for 10, 20, 30, 40 years, right? Like, that's just what it takes, you know? And people just give up too soon, in my opinion, you know?
What I think it is, dude, is I think people have this belief that to be successful, they need to, like, chase money. Think about what you're taught. You're taught to go to school, which we already know is broken. Go to college.
It's massively broken.
Super broken.
Yep.
Get a good job. Work your way up that job. Put your money in a 401k.
Yep.
Like, it's just broken. Like,
It
we're taught to put our money in a place that is losing control. We can't use it without a penalty. We're taught to not pay the taxes now and pay them in 30, 40 years when they're probably going to be higher.
Yep.
Why wouldn't you just pay them now? Why wouldn't you use the money now instead of using it in 30 or 40 years when it's worth less because of inflation?
Yep.
And we're taught to do that. We're taught to go make more money, but you'll never become wealthy doing that because what are you doing? You're focusing on just you, just you making more money. The second I started thinking, like, how can I help more people? How can I spread this word that this knowledge of infinite banking? It's helping me. So if it's helping me, I know it's going to help other people.
Sure.
How can I spread the word of it? Social media. The second I started thinking not about me making more money, about other people doing better and helping them with their money, guess what happened? I started making a shit ton more money.
Right. And you blew up on social media.
Yeah.
Right. Yeah.
Because I was helping more people. So I think for success, people need to figure out, like, what's something that I do really well? What's like my superpower? How can I serve more people?
Right.
And that the scale you serve people is how much money you make.
Sure.
Prime example is Jeff Bezos, multi-billionaire, because Amazon serves everybody, right?
Yep.
It solved a problem. Like, I hated going to stores.
Of course.
Hated it.
Yep.
Now it just gets delivered to my door next day.
Yeah.
That solved
Simple.
my problem. It solved everyone's problem.
Solved everybody's problem. Apple, every big company, right? Serving people, serving the masses. My mentor told me a long time ago, he's like, Austin, you help enough people get what they want in life, you get what you want every time, right?
Who were just Zig Ziglar?
He probably said that too. That's
That's
probably
his
where
quote.
I got that from, yeah.
That's his quote.
So somebody got it from him and passed it to me. I mean, I didn't make any of this up, right? But it's the truth, man. You know, Zig Ziglar, Napoleon Hill, a lot of these old school dudes, Jim Rohn, John C. Maxwell. I mean, Tony Robbins, they've been talking about this stuff for a long time, right?
It's the same thing, just said in a different way.
Everybody else is just regurgitating the same information, right?
Yep.
Really simple. What is your goal with social media? Like, do you want to do anything more with social media now? Like, are you, obviously social media helped you a ton, right? And I love social media. That's why we're here today. I think everybody is a marketer in 2022 and beyond. And no matter what you do, right? If you're a dentist or a lawyer or a doctor, like we're all marketing ourselves, right? Like, why should I use that dentist? Like, I was telling somebody the other day, I was thinking about, like a year or two ago, I was thinking about getting veneers. I didn't end up doing it yet, at least. But what dentist did I go do a consultation with? I went to the one that was verified on Instagram that was like the biggest name in Scottsdale, right? Like he was the dude at the time. I'm like, this guy's got 300,000 followers. He's a dentist. Here's all of his work right here, right? Like, that's the dude I'm going to go to, like, so he's marketing himself, right? And I think a lot of people look at people in the industry of real estate or life insurance or like all the big industries. But then it's like, they don't do, I don't know where the disconnect is. Like, so, you have almost 800,000 followers on TikTok. I don't know where you're at on IG or YouTube.
Like 190.
Okay. So you're big on IG. You have a YouTube channel?
Yeah. YouTube, I haven't been able to figure out.
It's a beast.
Yeah, so I'm at like 5,000
That's
subscribers.
not bad. Are you monetized yet?
I'm close.
Okay, so that'll change the game for you.
I'm at like 3,000 watch hours over the last 12 months.
Dude, you got to get that to 4,000.
Yeah,
because the moment you get there, it is my belief that YouTube will. There's a really high percentage. I don't know what that percentage is. That your channel will get a lot bigger because YouTube has a vested interest in your channel now.
Yeah, they want you to get paid because they get paid.
Right, it's a 50-50 split. Well, I think it's 55-45.
Yeah.
Right, between you, the creator, and YouTube. So for every dollar that comes into YouTube, they pay you 55% of that dollar, and they make 45%. Right.
Yeah.
So especially if you have like a clean channel, I've noticed a lot of people that have a clean channel. Remember, it's like you follow like Graham Stephan or any of the so. Think of Graham, right? He's never you'll never catch him cursing except for when he first got on YouTube. I followed him in like the very beginning. But like because he wants a clean channel, right? Because that means more advertisers will advertise on his channel. Makes sense. So his ad revenue is more money, right? His CPM's higher, So what is your goal with social media then?
First thing is the YouTube.
Yeah.
Like I figured out TikTok, I figured out Instagram. I haven't figured out YouTube.
Yeah.
So I'm getting there. So the first goal is to get to where it's monetized, have that grow, and then just keep growing everything else. Because to your point, people do business with brands that are well known, and all that is, it's just branding, right? Everyone is their own brand. It's just how do you brand yourself? Like I look at it this way: if anyone mentions my name, there should be nothing but good things said.
Yep.
Because I am super conscious about how am I perceived? What is my brand? When someone gets a hold of me, do I get back to them right away? Or do they text me and I don't respond for 3 or 4 days?
Sure.
Right? Like everything about me as a person is my brand, right? So I try to put that out on social media and be as authentic as possible because people can see through the bullshit.
Oh, yeah.
You know what I mean? They can see when you're not being truthful to who you are.
Yeah.
And then let's say if you are being you're trying to be someone else, you're trying to flex, you're trying to like drive a Ferrari and you don't even like Ferraris.
Yeah.
You're going to attract the wrong people, right?
Yeah.
So if you're just being authentic to you, you're going to attract the right people, your own tribe that clicks with you, and they're going to do business with you.
For sure.
100
times out of 100.
Yeah.
Yeah. Simple, man. I love that, dude. I think you're well on your way. You're bigger than I am on TikTok. YouTube, you're right around the corner. And I'm trying to figure out YouTube too, man. I think podcasting's big. I think like what I love about podcasting is if you were to ever start a podcast is that it makes you better too, right? Like I get to sit here not all day every day, but I get to sit here almost every day, right? And I get to talk to really talented individuals that know
just
more
learn from them.
And just learn.
Yeah.
And then, but it simultaneously help the world.
Yeah.
Because a lot of times I'm just genuinely curious, right? Of like what's going through your mind and how you operate and how you live your life and what do your relationships look like and like talk to me about this and that. And I feel like a lot of people are interested. They're just interested in the same thing, right?
Right.
So you do that enough times, a couple hundred times, and dude, that could be a big thing for you too eventually. Took me a long time to get into the podcast world though.
No, but it's so true. I think that's probably why you're successful in business, because you are curious. The most successful people are just curious.
Yeah.
They just want to learn. They have like an appetite for learning.
Yeah.
But again, school doesn't teach us how to learn.
No.
It teaches us how to memorize.
Yeah.
Right? And if you get it wrong, shame
Shame
on you.
on you, yep.
But like really in real life, if you get something wrong and you make a mistake, that's how you learn. Like we were talking before about my first deal that I did on my own.
Yeah.
I got kicked in the gonads left and right. And like I messed up.
Yeah.
But I learned. So now I know not to do those things again.
Yeah.
Like I lost money on one deal. It was $5,000, and it's because I bought the property sight unseen.
Okay. Where was the deal at?
It was like Indian School and like 15th Ave.
Okay. So here in Arizona.
Yeah, little rough of an area.
Yeah, like west side a little bit. Yeah.
But like there was a canal. My property was on this side of the canal.
Uh-huh.
All the comparables were on the other side. And they were super cute little houses, little brick houses, $300,000-$400,000. And I bought mine for like $170,000, I think. So I'm like, I'm gonna do good.
Yeah.
Probably take $60,000 to fix it up, make a good little profit. I did not understand that on my side of the canal, dude, you needed a bulletproof vest. It was rough.
Wow.
So the first person that comes up to see the house, the realtor notes were, didn't get out of the car, turned around and left.
Oh my gosh. Wow.
Dude, so I lost like $5,000 on that deal.
Yeah.
And it's like, that's a mistake.
Yep.
It's an oversight, but I learned from it,
Mm-hmm.
right? I'm never going to buy sight unseen again.
Yeah. What like when you bought it and then you like, I would imagine at some point you went and drove it, right? When did it click? When did it dawn on you? You're like, oh dang.
The first time I drove it. First time I walked it, it was me and Temp.
Yeah.
So I remember us like walking it. We're like, what did we just buy?
Uh-huh. Oh my god.
Because the house wasn't in like horrible condition. Just, dude, the neighbors like, it was like almost like a barn or something on the side of the house was like falling down onto our property. There was like this weird dog that lived there that had like 3 legs that looked like just he shouldn't be alive anymore. Just really rough looking. There was little bums like on the other side of the street in little tents. I'm like, what is going on?
Yeah. This is
Why did we
weird.
buy this?
Yeah.
Why did we buy it?
Wow. That's interesting because I feel like that area, just thinking out loud, it's like the area in general is not that bad of an area. I mean, I know that area.
It was just because of that little canal.
Wow.
Everything on our side of the canal for like just a little pocket was rough.
Yeah.
Really rough.
So, but what you were saying is like you learned from that though, right? And then I'd imagine, have you done deals after that deal?
Oh yeah.
Yeah. And
That was at maybe my 4th or 5th deal
okay.
that I did.
And what like, do you like flipping? I mean, is that a
Oh,
thing?
I hate it.
Really?
I freaking hate it.
Talk to me about that. Like, why? I feel like a lot of people want to flip. Like, they want to get into flipping. They see Tarek El Moussa on HGTV or whatever, right? And I talk to people all the time that they want to flip more. And a lot of flippers don't like flipping,
No.
right? So, like, tell me about it.
I think it's because it's so glamorized, right? You see Flip or Flop, you see all these shows on HGTV, and you're like, this looks so glamorous. I could do this and make so much money. And I thought the same thing. And dude, you just get kicked in the teeth left and right. You always end up spending more than you thought you were going to spend. You don't make as much as you thought you were going to make. When you make money, you have capital gains. So unless the project goes sideways and it takes over a year, you get hit with short-term capital gains, which is regular income taxed up to 40%.
Yeah.
So it's just like you don't make as much, you don't keep as much, and you're just constantly having to do another flip to have money coming in.
Sure.
The one cool thing about flips I will say is like seeing what you did. Like seeing before and after pictures, like here's what it looked like, here's what we made it into.
Yeah.
That's cool. Like seeing your vision come to fruition, but I don't like them. If it's up to me, I'm not doing any more flips.
Well, and like Burr, like talk to me about Burr, because like Burr is like there's no flip in Burr, there's no F in Burr, right?
Right.
It's but so like, is that something you would like to do more of? Just buy and keep?
Yeah.
Okay.
That's all I do now. And we turn our properties into Airbnbs because they're cash cows.
Yep.
So what we do is we buy the property, usually with hard money,
Okay.
renovate it with private money,
Okay.
and then I pay the hard money and private money interest from my insurance policy.
Sure.
So I borrow against my insurance policy to pay these lenders their interest. So the amount of money I have in the deal is like minuscule. It's just the interest to borrow against my policy.
Sure.
And then once the property is done, instead of refinancing it, I sell it to my wife. So she's W-2, super bankable, easy to get approved.
Yep.
Usually just a W-2 and 2 pay stubs. So I sell it to her. This allows us to dictate what we need the price to be in order to get the hard money back, the private money back, and get her down payment back.
Got it.
So then we're into it for no money. We have total control over the whole transaction, and then we just rinse and repeat.
I love that. And then you Airbnb it, right? Is that the primary focus? Do you do any long-term rental?
I used to, but like we were making at most, I think, $1,800 a month, and this was on a property that had like a mother-in-law suite, so it was like 2 rentals on one, and we were making like $1,800 a month.
Gotcha.
Which isn't bad. Dude, our Airbnbs, especially like this upcoming busy season, so January, February, March, April, and this year for sure, because we have the Super Bowl, dude, we're going to probably make each property net like 9-10 grand.
Wow. It's not bad at all.
No.
Where's that at? In like a West Valley or?
Scottsdale.
Okay.
Yeah. So we have
single family?
Yep.
Okay.
So we have 2 in Scottsdale, 3 in Scottsdale, 1 in the Biltmore.
Okay.
So we had like 9 properties, and appreciation was so high, we just
took advantage of it. Yeah.
Yeah, sold them.
May as well.
Took all the equity, put it into more insurance policies.
Yeah.
And then borrowed it back out and got these Airbnbs.
Which is awesome. Yeah. So then do you go in and furnish them? Do you and your wife do all this together? Or like, there's a lot of these companies now, they'll furnish the Airbnb for you. They'll manage it for you, the whole shebang. I mean, are you guys doing that, or do you hire somebody, or?
So I do all the managing, which is easy because there's an app called Guesty for Host, and it just does everything. It automates all the messaging and everything. So when someone books, it sends out a automated message. Hey, thanks for booking, blah, blah, blah. When they're about to check in, it gives them an automated message for the smart lock with the door.
You just write all the templates and stuff?
Yeah, just write the templates, and then I just pay attention when someone asks something, like a one-off question, I'll answer it. Because those companies, dude, they'll take like 25-30% of the gross.
Yeah, bro. I was talking to somebody literally yesterday, where I asked her, she came to this meetup or whatever we were doing, and she was passing out, whatever, and 30%.
Crazy.
She manages 800. Not all in Arizona, 800 around the nation, and she takes 30%. That's a business to be in.
Yeah,
because she just has the freaking app.
Yeah.
You know what I mean? Like I'm sure she's got a team of people now and stuff, but like still, that's a lot of money.
With 800, you'd probably need that.
Oh yeah.
But like for us, just a few rental properties, I can manage it all.
Yeah.
I probably spend weekly a couple hours.
Yeah. At the most.
Yeah.
Yeah.
And
it's kind of fun probably, right? I mean, just sit down and.
Yeah, just getting back to people. Like I'm super quick about getting back.
Yeah.
So if I get a message on my watch that someone messaged me on Airbnb, I'll go check it real quick. So we've got like great ratings.
Yeah.
Because think about most people, they want quick service.
Right. That's all they want.
Like.
It's the main thing they want.
There's a reason why there's a drive-through at coffee shops.
Mm-hmm.
People just want things quick.
Yep.
Right? So if someone asks a question on Airbnb and I get back to them within like 5 minutes, that's going to give me a good...
They're fired up about that.
Yeah, they're going to give me a good rating at the end.
Yeah.
Right? So I do all the managing. I don't want to give away 30% for something I can easily do.
Yep.
Eventually, I might have to do that if we get enough properties. But for now...
Or get enough properties and then just almost like hire somebody to do that. I mean, even a VA.
Yeah.
In the Philippines, and it's just like their job is to just monitor the app at any given time. And maybe you have them schedule the cleaners or whatever. I mean, I'm sure they could do it.
The app schedules it.
Dude,
Crazy.
That's awesome.
It throws like when there's a booking, it sends that booking to the cleaner and puts it on their calendar.
Whichever cleaner you choose, like whichever
Yeah.
relationship you have.
Yeah, and I basically hired my family.
Okay.
So
So you just input like their information and it'll send to them.
Yep.
Which is awesome.
Yep.
What about like a handyman? Something's broken. I mean, same thing.
Yeah, so get this. This is crazy. My business partner is my daughter's stepdad.
Okay.
Crazy, right?
All right. Mm-hmm.
Like, he's actually a GC, so he does all the renovating, all that on the back end with the properties.
Yep.
And then if anything goes wrong, he takes care of all like the maintenance issues.
Wow.
And then I take care of like finding the deal, funding it, and then just managing it along the way.
Yep.
But yeah, it's my daughter's stepdad.
You've got to love that.
Yeah, like our family, like
super tight.
We were just in Spain, all of us, me, my wife, my ex-wife, his wife, and him and my daughter. We're all in Spain on like a family trip.
Yeah.
We were just in Italy. Like, we all get along so well, which is amazing for our daughter, because then she has 4 parents instead of just 2.
Right.
That get along, that do well, that teach her how to like run businesses. And dude, this girl's gonna be dangerous.
Dude,
She's gonna be dangerous.
How old is she right now?
15.
Okay.
Which sucks.
Yeah.
Dude,
That's
sucks.
a heck of an age.
It sucks.
Right. They what's the 15 age? They just rebel or what is it?
No, she's got boobs and a butt, and like all the boys are looking at her.
All the boys want it. Yeah.
Yeah.
Mm-hmm.
Like, she looks just like her mom. Her mom had a big butt and big boobs, and so like she looks like that.
Right. So you got to be the
Yeah. So she's a great kid though. She wants to have a boyfriend, a first boyfriend, and this kid asked her like, "Hey, will you be my girlfriend?"
Yeah.
And she's like, "Oh yeah, he asked me, and I said I'd get back to him because I got to ask you." And I'm like, "I think he needs to ask me."
Yeah.
So I told her to tell him he has to ask me himself.
Oh my gosh. Did he call you?
No, but as soon as I see this kid, I'm just going to put the fear of God in him.
Right.
You know, that's why I work out, is just so I can intimidate little kids.
I love that. Yeah. I love that.
So that part of like 15 sucks, dude. The daughter turning into like a little woman, and you know that like guys are just trying to that's my little baby. I don't like it.
I know. I don't know, but I mean I can imagine. You know, I'll get there at some point. I just proposed.
Congrats, dude.
Thank you. Yeah. So
how'd you do it?
Sedona, La Berge. I don't know how to pronounce that hotel, but just total surprise. Had it all set up and did it really cool. And
she had no idea.
She didn't. I mean, I'm sure she had a little bit of it, but no, she didn't have any idea. I mean, she knew it was coming at some point.
Yeah.
But no, I mean, she was very surprised.
Yeah.
Super happy.
Did she do the whole?
Oh yeah, the whole thing, bro. The whole
starts
crying. Yep.
I love
She got me emotional, and I'm not an emotional guy, you know.
I love it.
Like, but when they get emotional, then you're like, you know, in the moment, right? You're super emotional, you know.
And
so
when was this?
Last weekend.
Heck
yeah. So
you
like,
guys have a date picked out yet or no?
No, we're not there yet.
Yeah.
I think something simple probably.
Yeah.
I don't think either of us really care for it to be like a big thing, you know? So we'll probably do something simple, then do like a dope honeymoon in like the Maldives or something,
Dude,
you know?
the Maldives.
I know.
That would be sick.
Yeah, and I've never been there. I've been all over the world. I've never been to Italy.
Italy's cool.
Yeah, you were just there, right?
Italy is really, really cool.
I'm excited to check that. She's been to Italy, actually.
The Amalfi Coast.
Okay.
If you go there. Like, we went to Italy and just jumped around place to place to place for 2 weeks. And it was cool, but it was like super tiring.
Yeah.
Because you're not like, it's not a vacation. Like, you go on a vacation, you're like chilling and just hanging out. This was like, let's get on this high-speed train and go here. Now let's go to Milan. Now let's come back to Rome. Now let's go to it was just.
That's awesome, dude. I love traveling like that.
It was cool, but like you get back and you're just like.
Yeah, for sure. I feel like that's how it is when you travel. Like anytime you have an entrepreneur or whatever that's traveling, you know, it's like dope, right? And you love it, but then when you it's always like coming back's just as cool, right? Like you're just excited to get back in your gym, your shower, your bed, your routine, right? Your car.
Who was I talking? It was Temp actually.
Okay.
I was talking to about this. Is when you're intentional about like building your life the way you want it, you go on a vacation, let's say, to get away from your life. That's what most people do. They want a vacation. They want to take a break.
Right.
When you've built the life you like,
Right.
and you go on this vacation, you can't wait to get back to your life.
Yeah. Because what do you take? You're taking a break from the thing that you love.
Yeah, you're taking a break from a dope ass life you built. Like, so I was talking to Tim about that, and he's like, "Yeah, dude, same thing with me. Like, whenever I go on a vacation, I'm like, I just want to get back to my life."
Right.
You know.
So true.
I'd be cool with not traveling, but wifey, she doesn't have any kids. I just have the one daughter, and she's 29. I'm almost 38.
Yep.
And she's like, "All right, we could probably start having some kids, but I want to travel first." So I was like, "Dope."
Yeah.
I'm booking all the tickets, dude.
I love that.
We've got trip in January to Cayman Islands.
Okay. If you're a real estate agent or a real estate wholesaler, then you know that lead generation is one of the most important aspects to any business. You know that you have to consistently generate leads on a weekly, monthly, and yearly basis. That way your team has people to call, and that way you're constantly getting new opportunities in your company. I actually partnered up with a company called Rocket Lead Services, and they have VAs that are outbound cold calling on your behalf every single day. In my experience, there's a lot of different ways that you can generate leads as an agent or as a wholesaler. You can do pay-per-click, you can drive for dollars, you can do text messaging, you can do Facebook ads, Instagram ads, and so much more. In my experience, I believe that cold calling is by far the #1 way to generate leads in 2022. Not only is it my favorite way, but it is the highest ROI from what I've ever found. So Rocket Lead Services is one of the best companies out there for doing just that. They have virtual assistants that get assigned to you and to you only that are constantly calling motivated sellers to generate leads for your business. Again, this is for anybody looking to generate seller leads for their business. This is for a solo real estate agent looking to do a couple of deals a month, all the way to teams that have over 100 agents and you're looking to generate more leads for your team. Wholesalers that are looking to generate more seller leads, all the way to wholesalers that are looking to do many, many deals per month. Go to www.rocketleadservices.com and go ahead and book your free consultation. Again, that is www.rocketleadservices.com and book your free consultation. Now, let's get back to the show.
We've got Ireland. We've got the Bahamas. We have Victoria, Canada.
Wow.
We've got Switzerland.
Yep.
So
a bunch of places I haven't been
until June.
Yep.
And I told her, I'm like, all right, is that good? She's
Yeah.
like, yeah. So June, I'm planting the seed.
I love that.
I'm shooting
dude.
shots.
Yeah, I love that. That's awesome, bro. Good for you, man. Good for you. Yeah, I've been to I've only been to the Bahamas out of everything you just named. But I've been to like Australia. I've been to all over Europe. I've been to
You went to the Down Under.
I did, yeah.
How'd you like it?
I loved it.
Dude, probably one of the best places we've been.
So
Australia.
cool, bro. Yeah.
The people
so
are
cool.
amazing.
I loved it, man. I went before COVID, obviously.
Same.
I've heard that COVID was weird there, and it's still a little weird, but I don't know,
Yeah.
But it was cool. I went to Bali, Indonesia. That was really cool. I wish I went to New Zealand. I didn't go to New Zealand.
New Zealand would be cool.
New Zealand would be cool. And I was right there multiple times. So, I don't know why I didn't go there. But I didn't go there. Been to, Hong Kong, places like that. And then
that's dope.
All over Europe. Yeah, Amsterdam, London, Paris,
Paris is awesome.
Paris is sick, bro.
Love Paris.
You had dinner in the Eiffel Tower?
No.
Okay, you got to do that.
But Paris was dope.
I had dinner in the Eiffel Tower. You actually go up to the top of the Eiffel Tower and eat dinner up there.
Wow.
Pretty freaking cool. And then when they do the lights, how they flicker? You'll be in the Eiffel Tower eating dinner, drinking champagne, and then the lights start doing that. It's pretty cool. Pretty epic.
Dude, anytime we go out of the country, I don't know if you know this, some people don't know this, is that you don't have to pay taxes. So if we're going to buy expensive stuff, Louis Vuitton, Gucci, whatever, we'll buy it out of the country.
Yeah.
Because one, it's not imported, so the price is actually cheaper there.
Yep.
And then two, you get the taxes back.
Right.
So when we were in Paris, that's where Louis Vuitton, like their headquarters.
Yeah.
Dude, the store is like 3
or 4 levels. I've been there. Yeah.
Crazy.
Wild.
Yeah. So like we're walking through, wifey gets a purse, I get a belt.
Yep.
I got,
If you're a real estate agent or a real estate wholesaler, then you know that lead generation is one of the most important aspects to any business. You know that you have to consistently generate leads on a weekly, monthly, and yearly basis. That way your team has people to call, and that way you're constantly getting new opportunities in your company. I actually partnered up with a company called Rocket Lead Services, and they have VAs that are outbound cold calling on your behalf every single day. In my experience, there's a lot of different ways that you can generate leads as an agent or as a wholesaler. You can do pay-per-click, you can drive for dollars, you can do text messaging, you can do Facebook ads, Instagram ads, and so much more. In my experience, I believe that cold calling is by far the #1 way to generate leads in 2022. Not only is it my favorite way, but it is the highest ROI from what I've ever found. So Rocket Lead Services is one of the best companies out there for doing just that. They have virtual assistants that get assigned to you and to you only that are constantly calling motivated sellers to generate leads for your business. Again, this is for anybody looking to generate seller leads for their business. This is for a solo real estate agent looking to do a couple of deals a month, all the way to teams that have over 100 agents and you're looking to generate more leads for your team. Wholesalers that are looking to generate more seller leads, all the way to wholesalers that are looking to do many, many deals per month. Go to www.rocketleadservices.com and go ahead and book your free consultation. Again, that is www.rocketleadservices.com and book your free consultation. Now, let's get back to the show.
a wallet, like we spent what we would have spent here, it was like half the price.
Wow. Dude, I love that.
And it's like,
how does it, I've bought stuff from that exact store in Paris. How does it work? Because like I just pay on my Amex and then like, but aren't I paying European taxes?
yep.
But then
So
I
you-
get them back.
You can only get them back if you have to ask them for it. So you say, hey, can I get the tax-free? They give you a receipt basically.
Gotcha.
And it shows what the tax are. It's a VAT tax. And then you have to show them your passport. So you have to have your passport on you when you're at the store.
Okay.
Show them the passport. They'll print up that receipt. And then when you get to the airport, you just have to go to the VAT stand and just show them, here's the receipt, here's what I bought. And then they, boom, give you the taxes back.
Really?
Yeah.
Dude, that's wild.
Yep.
So I didn't do that. So I overpaid.
You overpaid. Yeah.
Because I didn't do that.
You paid the taxes when you didn't have to.
I did, yeah. Wow. Well, now I know.
Yeah. So
I
next
gotta
time
go.
you do it, just have your passport on you
Okay.
and just say, hey, can I get the taxes back on this?
Wow.
And they'll do a little copy of it. Boom, boom, boom.
Interesting.
Done.
So, and I'm sure they can do that here too when they're here in America. Maybe. I don't know if it works the other way
don't know.
around. Who knows?
It might,
Yeah.
but
It's interesting.
who knows?
We were talking about working out. I know we're getting a little bit long here, but we were talking about working out a little while ago. Like, talk to me about your workout routine and then how that goes with being an entrepreneur. You know, I think there's a lot of entrepreneurs that, like for me, I was telling you before the show, and I know a lot of people struggle with this, is like, I feel like a lot of people sacrifice their health in order to build wealth. And then what I've seen a lot of is then they get older and then they start spending all of their wealth to get back their health. Right. And so like, how have you done it where you have kind of commingled or been able to do the health and the wealth simultaneously? Or was it always like that? Or did you, I mean, because you look good, right?
Thank you.
So,
It's been a struggle. Let's call it that. Because to do exceptionally well at anything, you have to just be obsessed with it.
Yep.
Right? Like if you're going to be in amazing shape, you got to be obsessed with going to the gym every day. You got to be obsessed with eating the right foods, drinking all the water you can. And if you do that, then other things slip. Like before I got into real estate, I used to bodybuild. So from 2014 to 17, I did men's physique shows. Dude, I got down to like 3% body fat. Like my abs had abs, right?
Wow.
And everything else in my life sucked though. I was bankrupt, in and out of like just bad relationships because my only focus was get in shape, get in shape, get in shape, get jacked, get dialed. That was it.
Yeah.
So I got into real estate, and I'm like, focus on making money, focus on building this business, focus on that. So then what happens is you spend a little more time doing that, not at the gym. You don't sleep as much. You don't eat the right foods because you just want something quick. So I've struggled with it. I think I've finally found like a good balance where I'm not in the shape I was when I was competing, but I think probably for most people, I'm in amazing shape. They'd love to be in the shape I'm in. I still have abs, just the abs don't have abs.
Yeah.
Right?
Yep, for sure. And what does that current structure look like?
It's a morning routine.
Cool.
It's huge. What I do is I wake up at 3:45 every day. Not willingly. Like the alarm goes off and I have to, it takes a while for me to get out of bed, but I put the alarm away from the bed, so I have to get up to turn it off. So 3:45, alarm goes off. I usually turn it off after like 5 minutes and I'm just annoyed with it, right?
Right.
So I get up, turn it off, wash my face, brush my teeth, drain the snake, and then I go meditate for 10 minutes usually, clear my mind, get ready for the gym. I'm at the gym usually by no later than like 5 a.m.
Okay.
So then I'll stretch, I'll foam roll, and then I'll hit a workout, whether it's arms, legs, chest and back, whatever it is. And then I'll do cardio right afterwards for 30 minutes to an hour. And then I get home, cold plunge.
Yep.
Cold plunge to hot tub. Then I shower, take my daughter to school. Once I get back, it's like 7:15. I'm ready to crush.
Right.
Most people are just waking up.
Yeah.
You know what I mean?
You're ready to dominate.
So by 7:30, let's say at the latest, I'm dialed. I'm ready to go. I'm on calls. I'm in appointments. I'm on Zoom calls. And I go hard until about noon.
Okay.
And if I have things that trickle over, I'll check emails. I'll do this. I'll do that. I'll make a few calls. But I try to be done by noon.
Wow.
So that
That's
way
awesome.
the rest of the day is dedicated to spending time with my dog, spending time with my wife, spending time with my daughter when she gets out of school. And then by like 8 o'clock, I'm beat.
You're
dude.
done.
Yeah. So 8 o'clock comes around, I'm like nodding off. So 8:30, I'm out cold.
Yep.
So then I can get up easier again the next day.
Yeah.
So I think that's been the thing, is making sure
The morning routine.
the morning routine, getting like the working out and the self-development done before you have excuses for one,
Yeah.
and before like the rest of the world is alive and up.
I think you have to, bro. I think every successful person that I've ever talked to is a morning. They I shouldn't say they're a morning person. A
'Cause
lot of them
definitely not.
aren't, but they've committed to being a morning person. I
Yeah.
mean, whether they're naturally that or not, they've committed to making the morning, like, I mean, that's what they do, right? Like, they're not, I very rarely meet high performers that are like night owls. I mean, they're probably out there. I don't want to like, they're out there, I'm sure. But like, I think most people, the morning is just where it's at, dude. You know?
Sure.
Yep, I'm the same way. So, you're loving the cold plunge. We were talking about that before
man.
the show.
I freaking love it.
Dude, how long have you been doing the cold? You bought the actual cold plunge, the one that they advertise on Shark Tank.
Yeah. So originally I bought a chest freezer,
Mm-hmm.
and again, this all goes back to you make mistakes and this is how you learn, right? So I bought the chest freezer and it was like definitely not big enough, right? So I turned it into a cold plunge, and it was like I would be in it like this, and just, I'm not a big guy, and I still didn't have room.
Yeah.
So I'm like, this isn't big enough. I got to get a bigger one. So I'd already spent like $400 or $500 making that into a cold plunge.
Yep.
So I bought a bigger one, and then I set it all up, and then I guess I didn't do something right. It kept getting mold inside of it. And then it turned into black mold. And I'm like, this is supposed to be for my health, and I'm sitting in this thing that has black mold. It's probably not healthy.
Sure.
So spent about $1,100 on that. Again, made a mistake. So I'm just like, let me get the real thing, the one that's made for this. Spent $6,000 on that, but dude, I love it because I don't have to do anything. I put the water in there. It filtrates the water all day long, 24 hours a day, 7 days a week. And you just have to change the filter like once a month.
Yep.
Drain it out, do a deep clean like once every 6 months.
Wow.
It's incredible.
It's awesome. There's like they have covers and stuff. Like,
it's got a
you
cover.
cover it up. Yep.
Yep. It's just like a hot tub's cover.
You just throw it out in your backyard.
Yep.
Okay.
It's right beside my house, and
Yeah.
I just jump in there, get real cold.
Dude,
and
they say it increases your, I want to say if you do it for 11 minutes a week, there was a study that I was reading where 11 minutes a week increases your dopamine levels by like 200%.
Oh, it's at least. It's got to be.
11 minutes a week in the cold plunge.
Yeah.
Yeah, which is wild.
Dude, I've done up to 19 minutes one time.
Wow.
Just
That's
one
a long
time sitting there
time.
for 19 minutes. I got out and I could not get warm.
I'm sure you couldn't.
I was in like a hot shower and I'm just like shivering in the shower.
I bet.
And then I like got out of the shower, put on like 3 layers of clothing. I'm like laying under my blankets. I'm like, I'm so cold.
Oh my gosh. That's too. And yours is cold too. Like we were talking before the show, you're like 30,
39.
39. Okay.
Yeah. It's
That's
freaking cold, dude.
It's real cold.
It's cold.
Yeah.
But I think it's one of the best things people can do. One, for your health, because it helps with immune system, dopamine. It helps with like skin health, hair health. It helps with mindset.
Big time.
Dude, if you can get into freezing cold water willingly, like you're training your mind to listen to you instead of you listening to your mind.
Right.
Right. So it builds really, really thick skin from a mindset standpoint. And it helps regulate temperature. So you were talking about like you don't get cold in places when you would normally get cold, right?
100%. It's cold in here right now, and I'm not cold at all.
No.
And I know for a fact it's probably 68 in here right now.
It's amazing.
Yeah,
I love it. My wife would be dying.
Right.
She would literally be like an ice cube right now. But yeah, it helps with that. And we're actually watching a documentary right now with Chris Hemsworth.
Okay.
It's called Limitless.
Okay.
On National Geographic.
Really?
And he does all these different body hacks to like improve longevity and live longer. And one of them is getting into freezing cold water on a regular basis.
Really?
Yeah.
Is it a series? Like, could I go watch that? Okay.
Yeah.
Wow.
So we have it on Disney Plus.
Okay.
Yeah.
Disney Plus, and it's called
Limitless.
Limitless with Chris Hemsworth.
Yeah. So Thor.
Interesting. Okay. Yeah.
Thor gets into freezing cold water. If he does it, I might as well.
You got to listen. I'll send you the link. But Andrew Huberman made like an hour and a half, 2-hour long video. He talks about that and the sauna. The sauna being really powerful and really good for you too. So something you should definitely check. I'll send you the video. It's really cool. He does a really good job of explaining it. I feel like he articulates himself very well.
I want a sauna. That's my next thing.
Saunas are awesome, dude. Or just go to like Lifetime or something. But I mean, I love the sauna. I live and die by the sauna. I started doing the sauna like 2 or 3 years ago. And I got to a point where like I thoroughly, like genuinely enjoyed the sauna. Like it wasn't forced at all. Like I actually would literally look forward to going and sitting in the sauna for like a half hour, 45 minutes. Like I'm not talking about just, I mean, or longer. I mean, I could go forever now in the sauna. I could sit in there for an hour and it not even bother me. I don't typically because it's not good for you. But
usually what, 20 minutes?
So it depends on how hot they are. So Andrew Huberman made another video on that too, and I've watched a lot of videos. But you have to be careful that the saunas that you buy online, the ones that you can like put in your garage or your house or whatever, a lot of those, the infrared ones, they don't get hot enough. So they only get up to like 150 or 155 degrees typically, which if you actually like dig deep into the world of heat, therapy, it's not hot enough. Yeah, you need like 180 or more. 180 to 220 is where they really say you get that full benefit of actually sitting in the heat. So like Lifetime was the only gym I ever found because I went to like EOS. I went to trying to find a sauna that was hot enough, right? Before I had a sauna where I lived. And I went every gym. And they're all like 150, 160. I mean, you just kind of go in there and it's like you take 20 minutes before you even start sweating. I mean, it's just not, it's not hot enough, right? And I mean, in Arizona, it gets to 120. I mean, we're only talking 30 degrees hotter than that. It's just not hot enough.
Yeah.
And so, yeah, dude, get it. If you could find one that'll get up to like I would say 200 is like the sweet spot.
It's the barrel saunas, right?
Yeah, the barrel saunas. A lot of those do it. Yep. Well, you just see, it's all about just how many heaters do you have in the sauna compared to how big's the sauna.
Got it.
Right. So I think a lot of these saunas are just underheated. When they built the sauna, they just didn't. For whatever reason, their intent was just to not have it that hot, I guess. Like we have one at Optima, Kierland, on the rooftop actually, of our building, and it's the room's probably about the size of this room, and there's 2 big heaters in there in the sauna, and that thing gets hot, dude. I mean, you'll be on the rooftop like 220 all
Just
day.
dying.
220. And then you'll go right from 220 to 40, So, I mean, 180 in the water, in the cold plunge,
Dude, I need one.
Yeah.
I want one so bad, but
you'll love the sauna. They say it decreases your, dude, it's like wild. Saunas are like, if you do sauna and cold plunge, man, I mean, it decreases your chance of like stroke by like, don't quote me, but I mean, I've seen stats like 80%. I mean, it's like ridiculous. Like
That's
heart
crazy.
attack, stroke, like just, I mean, insane benefits of sitting in the sauna.
I need one.
Yeah.
Like, I keep telling wifey, I'm like, I want to get one. She's like, if you spend any more money. Because my wife, it's hilarious.
Yeah.
I always tell people, she's the reason we'll never be broke.
Uh-huh.
I'm the reason we'll be filthy rich.
Right.
Because she is like, save,
I like how you worded that though. Yeah.
But it's true, man. Like, if I spend any money, she's like, what was it on?
Yeah.
Was it on sale? If it was on sale, she like kind of gives me a pass.
Okay.
But like, if I'm buying it full retail,
Yep.
she's like so pissed off.
Oh my gosh.
She's like, why did you spend money on that?
Right. Why didn't you wait till Black Friday or whatever?
Yeah. So like, that's just how she was brought up.
Yeah.
Like a big family of savers, and I wasn't brought up that way. My family, like, just you made money, you spend it. Make money, you spend it. So
And they're probably both to a degree not accurate, right? Because
Right.
I mean, you really listen to like the real wealthy people, and they'll like, you can't save your way to wealth,
right.
right? But you got to save. I mean, like it's somewhere in the middle, right? It's almost like you do have to save. You just can't save your way to wealth. Like, I think there's a lot of people that live in the world where like, if I don't go get Starbucks or something, like I'll eventually be wealthy. It's like, well, that's probably not what's going to make you wealthy.
Right.
Like, you might end up with an extra 30 grand in your bank in 20 years from now.
Right.
But like, you're not going to be worth $10 million doing that, right?
Dude, that's why I like infinite banking, because it literally allows you to save. So you put money in a policy, you're saving money. It's growing tax-free, guaranteed. It's just going to keep getting bigger. So you're saving it, but then you're borrowing against it, and you're spending the money at the same time.
Yeah.
So you're borrowing, as long as you know how to make a positive arbitrage on the money.
Yep.
And for anyone that doesn't know, arbitrage is just spread on money. So if you borrow at 5, if you can make 6, you made a 1% spread.
Yep.
Right? So as long as you know how to do that, dude, infinite banking is the best thing ever.
Yep.
You get your cake and eat it too. Save plus spend.
Right.
Save plus invest instead of one or the other.
I love it. I love infinite banking. I mean, I'm gonna look into it. It's like, we're gonna walk out of here in a minute, and what videos, what books should I listen to, and then like, what should these people listen to?
So the best thing to do is on like any of my social media platforms. The link in my bio is a landing page. At the top, it says infinite banking. And I've got a training video.
Okay.
It's like hour long. It gives all the basics. It shows illustrations, shows real numbers, how the concept works. And then afterwards, people can jump on a call with either myself or someone on my team.
Love it.
And then we can just answer more questions and then set people up with policies.
I love that.
So that's like the best way to go about it. There's so many good books, though, that I've read. There's Becoming Your Own Banker by R. Nelson Nash. He created the concept.
Really?
It's like a 70-page book. Incredible. I've read it like 7 times.
Wow.
It's incredible. What Would the Rockefellers Do by Garrett Gunderson.
Okay.
Everyone knows the Rockefeller family. What they do is they buy life insurance on every single child that's born into that family within 2 weeks of them being born. So this kid now has a life insurance policy on them. And as they grow in age, it just gets bigger and bigger, the amount of money, right?
Right.
And they set up trusts to where when that kid passes away, the money goes into the trust, and then it has to trickle into another policy that's designed where you can use it. So the family just gets wealthier.
It's literally an infinitely wealthy way to build wealth. Like,
and to never pay taxes.
Right.
Because think about it. If I put money into a policy now, I paid taxes on the money before it went in.
Sure.
Right? And then it grows tax-free. It'll never be taxed. So I can use it tax-free. And then when I pass away, the death benefit is tax-free. It goes into the trust. And then the trust puts it into another policy that grows tax-free.
Right.
So like for me, I've got policies that go to my daughter, but they have to go into the trust first and then into a policy for her. And then the trust dictates that the same thing has to happen to her kids, my grandkids.
Wow.
When she passes away, all the death benefit is paid into the trust. That money pays into a new policy for her kids. Taxes are never paid again after I pay them one time now.
That's how you create generational wealth. I mean, that's one of the ways you do it, right?
Indestructible wealth.
Indestructible generational wealth.
Because if you do any research on wealth, it's generally squandered by the second or third generation.
Right.
Just because they don't have the same values as the first generation had to get that wealth and to keep it, right? The reason why the Rockefeller family is so wealthy, I think it's at 9 generations now, is because everything flows through a trust.
It's dictated. There isn't, you can't change the model.
Right.
The model was created at the top.
Yep.
That's the model. The trust dictates it has to go down like this.
Yep.
Right. And they still have all the money they need to live a great life.
Amazing life.
An incredible, obviously, right?
Yeah.
That's awesome. Wow. I hadn't even ever thought about that. I've never studied that in particular. You know, I've always just thought own 10,000 units of real estate has always been my goal, right?
Yeah.
I have 10,000 doors.
Which is nice,
Yep.
right? But then think about this. At that point, you probably have a tax problem. You've got all this income, and you can only write off so much,
Right.
right? You can do like bonus depreciation, cost segregations, and that stuff. But what are you doing? You're just kicking the can down the road. Eventually, you got to pay taxes on it. So I've learned some just ninja moves where you can have a trust set up properly to where the trust owns all your stuff, right? You don't own it. The trust owns it. You just control the trust. And then the trust donates those assets to a foundation that you also control. The foundation is 100% tax exempt.
Wow.
So all of my rental income, 0 taxes.
Wow.
Because the foundation owns the properties, not me.
Yep.
So all of that income is not taxed. And then since it's not taxed, let's say easy math, let's say I made $1 million. Generally, I'd have to pay, if I don't have any deductions, about $400,000, right?
Yep.
So if I don't have to pay that $400,000, I've got $400,000 more that I can reinvest to get more assets.
Which compounds.
That they go into the trust now. They donate to the foundation. So that's even more that I don't have to pay in taxes, even more to invest.
Yep.
So, dude, like,
game over.
Once you learn these little tricks, like, anyone can become wealthy. You just have to do a little planning. You have to learn, and then you just have to implement.
Yep. Yeah,
You know?
and do and be consistent.
That's it.
That's
And
all it is.
help a lot of people.
I love it, dude. That's awesome. What is like one tip, man? I always ask at the end, if you could give your old self a piece of advice, it could be anything: life advice, business, relationship advice, like, you know, your 18-year-old self or whatever. What would that be?
I just made a YouTube video on this. The thumbnail is like me, like whispering into my 18-year-old self.
No way.
It's a picture of me at 18.
I love that. I'll have to watch the video.
And I'm like, I got my arm around my 18-year-old self, and I'm like, little whisper. But the biggest thing I would do is just say, dude, all these people that you're associating with, they're not going to be around in a few years. Like, all these parties you're going to, they don't matter. These people are not going to be there.
Yeah.
Get around people that bring you higher. When I really started seeing success, it was because I surrounded myself with people that were way more successful than me. Like all this stuff with trusts and life insurance, it's because I got around people that just knew the stuff, that were more wealthy than me. And now I start learning it, I start implementing it, and I start helping other people with it, right?
Yep.
So I would just tell my 18-year-old self, dude, get around really successful people.
I love that.
Early. All these knuckleheads you're hanging out with, they will not be here in a few years. They're not going to be here for you. If you need them, they're not going to be around. Get around the people that are going to bring you higher.
Gotta hang around the right people, bro.
Have to, dude.
So important.
If you constantly hang around out of shape people, you're probably going to be out of shape because you're going to eat what they eat. You're going to drink what they drink.
Yeah.
You're going to have the habits they have. If you're around people that are in shape all the time, you're going to go to the gym. You're going to eat right. You're going to drink water, right? If you're around people that are broke, they're going to be talking about how they're broke. So you're going to talk about how you're broke. They're going to go to their 9 to 5. Like, you're a product of your environment. So I would tell myself, dude, seek out super successful people, right? And just be interested in them. Be super curious on how they got there, and I hate saying the word pick their brain because I think it's just weird. Like I just envision like a little, what's the monkey that like pulls, like
spider monkey.
They pull stuff off of the other one and eat it.
Yeah.
I envision like a little like person like picking at a brain. Like it's so weird.
It is a weird term. Yeah.
So I would just tell them, get around people that are real successful and learn from them.
Yep.
Be curious.
Law of association.
Yep.
Yeah, you got to get around it. I love that, man. It's a phenomenal piece of advice for sure. Well, dude, I know we've been on for a while. How can people find you on social media? What platform would you recommend they go to?
I'm biggest right now on Instagram.
Okay.
So it's Mr._Burr, B with 4 R's. TikTok, I've got a ton of videos. I'm just not on there much anymore. TikTok, I feel like is just weird lately. I'll put a video out, same time, same video on Instagram and TikTok. TikTok will get like hundreds of views. Instagram will get like 100,000 views.
Wow.
It's weird.
Yeah, mine have both been a little weird lately too. My TikTok was the one that would crush before.
Right.
Not that long ago either. Like I would throw a video on TikTok and get 100K, 500K, a mil.
Yeah.
1.5 mil on TikTok. And then now not so much. I'll still get like 5, 10K a little bit here and there. But my Instagram's also, I'm only getting like 5, 10K. So which is kind of weird. I got
Reels.
Yeah.
Yeah.
But a lot of it is this stuff. I'm gonna switch it up a little in between this kind of stuff. I chop a lot of this up. I'm also gonna play around with like adding music, and seeing what that does, and just editing a little bit differently. I just got to play around with it. I think I also haven't posted as many reels on IG as I have like TikToks on TikTok. So like when I look at a lot of these big dudes like Pineda or whoever, right? That's like just freaking. They've got 3,500 reels they've posted over the last 2 years. Yeah. Right? Whereas I have like 400. I mean, like it's not in the grand scheme.
You just got to do more.
I think I just got to do more. Because I've got like 590K on IG. But that was like, I built that because I just got on IG in 2011. So like I just built that by living a dope life for like 8 years with pictures. Like not video, right?
Not
that
reels.
was before everything changed, So that was just like, back when you had like the super aesthetic like profile, with the car, or the travel, or the girl, or whatever, the watch, but then when they pivoted, like I had to pivot. My focus was on like YouTube and TikTok, and then I had to so we'll see.
You know what I've learned on Instagram? TikTok used to be like this, but it's not anymore for some reason, is you got to be like super polarizing.
On IG.
Yeah. Like people are either going to like you, love you, or hate you. You can't like please everyone, obviously.
Sure.
So you have to talk about things that are real controversial. Like when I talk about life insurance, it always does well because most people are like, oh, this guy's a scammer, blah, blah, blah.
Yeah.
Snake oil salesman. And it's like, that's going to be half the people. The other half will listen.
And they'll love you.
And they'll be like, this makes so much sense. Let me follow this guy and learn more from him. And then almost every video I do about life insurance does well.
Wow.
Every single one. It's when I start talking about, here's how I do real estate. Here's what I believe you should eat in the morning. It's like, wah, wah, wah.
Right.
Doesn't get anything.
Yeah, I think you can talk about that information, but you have to go about it in a polarizing way.
Yeah.
So, like, it's all about how you word it, right?
Andrew
like
Tate.
Right.
Great example.
Great example.
He'll talk about everything, but he'll
Great
be like
example of
super polarizing.
Even like Graham Stephan, bro. Like if you really look at Graham, I know Graham and I've known him for a long time. I knew Graham when he probably had like 10,000 subscribers on YouTube total.
Yeah.
Between all of his channels. So like 2000, like a long time ago, right? And we would go to dinner. Like we hung out quite a bit back in the day. And Graham's been saying the same thing. He still to this day is saying the same thing he said back then, right? But like instead of naming a video, save money, invest in a Roth IRA, like he doesn't name it that. It's like how to make $1 million, right? Or like how to like it's like very clickbait, right? Like everything's hook and clickbait.
Yeah.
And there's a lot of like the editing's really good. Just how he goes about it is really good.
His editing is nuts.
On another level,
really
right?
Good.
But the information is simple. Like if you really peel back the onion, but he doesn't. When you initially click on that video, you think like, oh my god, like I'm gonna learn how to like be a millionaire right now, like in the next 5 minutes, like and then it's like and then it's like have an emergency fund, and like, you know, it's like really boring information, but the way he presents it is super interesting, right?
Yeah.
So I think you just have to do more, but you have to figure that out on like IG. And
It's true though, because I had a video that went, one of my most viral videos, it's like 6 million views. I'm walking out and I'm showing my 3 cars. And I'm like, when you buy a car, you should never do this. And then people are like,
right. Like,
what should I never do when I buy a car? Because everyone buys cars,
Yeah.
right? So it's something that hooks them right away. And then the next part is like, I've got a wad of cash. I'm like, you should never buy the car with cash. And I like slap the money down on the table.
Yep.
People are like, what? Dave Ramsey says buy everything with cash.
Yeah.
So then you get more people like hooked into it. You should never finance the car because then you're just paying interest to the bank. You should never lease a car because then you just got a rental.
Yeah.
So this is like 15 seconds in and everyone's like, what should I never do? Like, what else? What should I actually do?
Yeah.
And then I tell them how to use infinite banking to buy the car and get the money back for it.
Yeah. I love that.
So that video went crazy because of the hook.
Yep.
And it's polarizing and it's talking about something super controversial. Like people think, again, life insurance is for the death benefit. That's only if it's structured that way.
Right.
And if it's structured that way, that just means that the agent made a lot of money.
Right. Yeah. And probably didn't inform you or do his or her best job at really, truly getting you the best thing for you.
No.
Right. At all. Which means most people don't have the best thing for them.
They have the best thing if they die.
Sure.
Their family is hooked up.
Yeah.
But like for them personally, it's not great for them.
No, not at all. And your family's still hooked up doing it the other way.
100%. It's actually, it's hard to explain without showing people numbers.
Yeah.
But the way these policies are set up is the death benefit starts out small because there's low cost and you're overfunding the death benefit. By overfunding it, you're getting more cash value. As your cash value expands and grows, so does the death benefit. Because for it not to be an investment, for it to remain a life insurance policy, there has to be a corridor between the cash value and the death benefit. So over time, you get all this cash that you can use, but your death benefit just keeps getting bigger and bigger and bigger and bigger. So for instance, I've got about $30 million right now. By the time I'm 70, it's up at like almost 200 million.
Wow. It's freaking nuts.
Crazy.
Assuming you didn't invest any more money, right? Or get any more policies or change anything, right?
Just assuming I keep doing what I'm doing now.
Yep.
And that's crazy too, because let's say the cash value at 70 is 150 million. So I could use all 150 million, go buy whatever I want, and then let's say I die the next day. My family gets the difference because the death benefit will pay off everything I used, and then they get whatever it is, 50 million, right?
Yep.
They also get everything that I bought with the 150 million.
Gotcha.
You know what I mean?
So interesting.
Yeah.
I can't believe I've never heard about it. I'm gonna be when we're off the air, like you're gonna have to tell me where to go, what to do.
For sure, dude.
You know,
I got you.
I love that, bro. Okay, well, I appreciate you being on here, man. I'm gonna have make sure everybody comes and follows you, Mr._Burr 4 R's.
Yep.
Dude, you guys got to go follow this guy on IG. If you're still watching the show, I appreciate you for watching. If you're on YouTube, drop a comment down below, like the video. If you're on any other platform, podcast, Spotify, whatever, leave a 5-star review. I would greatly appreciate it if you did that. And man, I just appreciate you being here, brother.
Appreciate you having me.
Appreciate you taking the time.
It was great.
Okay. Hey, we'll see you next time.